This is exactly how the dot-com crash started. And it's happening again. You see, right now we're living through something that most people don't fully understand yet. But if you study history, you'll recognize the pattern immediately. And I want to talk about the mindset for navigating what's coming because this is not discussed enough. Most people think these transitions are just about markets or currencies collapsing or policy decisions, but there's something deeper happening beneath the surface that's disrupting everything. And before we get into that, I want to mention something interesting that's been happening in the infrastructure space, particularly with companies supplying critical components to the AI build-out. There's one company in particular, and I'll come back to this later, but it's supplying optical components to NVIDIA, Google, and all the major hyperscalers building out these massive data centers. Now, before we dive in, the only thing I ask in return for all the work that goes into making a video like this is that you hit that like button and don't forget to subscribe. Every time you do that, YouTube pushes this video out to more people, which helps us prepare more people for what's happening. And if you want access to my best trade of the day based off a combination of market experience and algorithmic screeners that I use, plus daily live streams on market analysis that cover any questions you ask in the community, try my Discord, the Stocks Community, for just $25 for 7 days at stockscommunity.com. And if you're looking for a free resource, head over to free.stockscommunity.com, where you'll be able to sign up for my free newsletter and get market updates that I can't share here on YouTube due to the sensitive nature of the content, some of which involves government figures and their stock portfolios that YouTube can sometimes restrict on its platform. The link is in the description below. As always, this is not financial advice. Do your own research. Now, if we look at history, every single monetary reset begins the same way. And it's not with markets crashing. It starts with denial. People refusing to accept that the world is changing, that something beneath the surface is shifting everything that they thought they knew about the economy. And you know what's the truth? People first, before even losing their wealth, they lose their frame of reference. They cling to old rules in a system that's no longer the same and changing pretty quick. And the sad part is, by the time it's obvious and the reset becomes extremely clear, the damage is already done. All the warning signs were there, but the problem was people were unable to accept what was happening, and they lacked the psychological strength required to face it. The late stages of every monetary shift does not reward the smartest people in the room or even the most educated or most experienced. It rewards the people that were most adaptable, those that were emotionally detached from the outcomes, and those that were willing to abandon comforting illusions designed specifically to keep them docile and doing nothing. And this is exactly what we saw during the dot-com era. History's first lesson is that resets break people and break minds before they even break currencies. Every major reset, from Rome in the 3rd century to Weimar Germany in the 1920s and the collapse of Bretton Woods and emerging market crises we've seen throughout history, all of them followed the same psychological pattern. First disbelief, then anger, then confusion, and finally resignation. And by the time most people reached that point of acceptance, the opportunity window had already closed. They were already in a different world and they missed out on all the opportunities and ability to protect themselves. And that harsh truth is that the system is not designed to save you, and it never will. So stop buying into that nonsense. This is the part where most people struggle to accept. They think the system is going to save them. Monetary resets and everything you're seeing now is not an accident. They're not temporary malfunctions, and you have to understand the system to understand what's happening. But what they are is political solutions to mathematical problems that were created by rising debt levels that unfortunately central banks cannot fix and governments can't fix either. So when governments and rulers are forced to choose between societal stability and monetary integrity will always lose because the governments and the rulers and policymakers will always sacrifice currencies, your money, so that the system can survive and to keep buying time. Now, what that means in plain English is basically policymakers that have the power, that control the laws, will always choose short-term survival over long-term stability at the expense of us, the people. Now, Once you finally accept this reality and that we're living through this period now, the emotional fog lifts. You start to see clear. You stop wanting fairness. You stop expecting accountability from all these people up there that control everything, the central planners. And most importantly, you stop anchoring decisions to a past that no longer exists. This is just being logical and looking at the facts and the data right in front of us. It's hidden in plain sight, which leads me to my second point. Acceptance is not defeat, not in this world. It's leverage, and that's how I look at it. I think it's powerful. Acceptance is completely, in my opinion, often mistaken for pessimism in these situations, but in reality, it's not. It's a form of power, and I'll explain that because that's the thing. That's why your mindset, your mentality, the way you're looking at things matter far more than timing any of these events that are playing out. And the people who make it through these periods and these transitions, they aren't always the smartest or most educated people in the room. They're actually rarely the most confident at the start either. But what's different about them is they are the ones who really accept reality early. They know how to distinguish what's truth and what's not, and they can face discomfort even though it's the unpopular thing to do. And it's important to understand that acceptance, it doesn't mean giving up. It just means you have more clarity based on everything happening in the world. And the truth is, those who accepted, for example, the end of the gold standard, they positioned themselves for the inflationary 1970s because they were able to accept what was actually happening, and they were able to position themselves to protect themselves. And those who accepted the collapse of the Soviet ruble moved capital. They were smart with their money. They gained skills and influence before the gates closed, and they made moves. Now, those who also accepted the post-2008 world, that it wasn't temporary, accepted what was happening faster than everyone else, and they stopped waiting for things to normalize. And that acceptance allows you to stop fighting the shifts that are out of your control and start focusing on exploring it and putting yourself in a better position to be better positioned for what comes next, for the inevitable destination and the outcome. And that's the key here. And once you accept the reality of the current situation right now, so for example, a debasing currency that's losing its purchasing power and that debt will never get repaid by the people that run the system, and that policymakers will always choose short-term stability over long-term purchasing power and long-term stability for the people. Once you understand governments aren't designed to protect your prosperity, something shifts in your mind. You stop waiting for a return to normal and start adapting. Most people never make this shift because it requires uncomfortable decisions early on. During monetary resets, conventional wisdom fails because it was built for a stable system that no longer exists. The people who preserve wealth during these transitions own assets that endure the shift and carry value into the new system. They position themselves for the world being built, not the one fading away. Currently, we're living in a period where new technologies are becoming critical parts of this new system. Blockchain, AI, robotics, energy infrastructure, even gold and silver are going to be more important than ever. The CEO of Anthropic just laid out the single biggest financial risk in AI right now. It's not whether the technology works. It's whether the money comes back fast enough to justify what's being spent. Building AI data centers costs tens of billions and takes 2 years to finish. Companies are placing massive bets today on what revenue will look like in 2027. Being off by just 20% when you've committed that capital is fatal. Big tech is spending $625 billion on AI infrastructure in 2026 alone, but AI services are only generating about $25 billion in revenue. That's a 4% return. It's the same dynamic that wiped out .com companies in the early 2000s. They built infrastructure for demand that eventually came, but came too late to save them. Today's valuations are out of touch with reality. Anthropic and OpenAI have 30 to 35 million paid users, just like Netflix did 10 years ago. It took Netflix a decade to reach 260 million subscribers, and they're worth $325 billion today. Anthropic is already valued at $380 billion, and OpenAI at $500 billion, considering going public at $800 billion. They're pricing companies today based on where they think they'll be 10 years from now. Those who bought Cisco at the peak of the dot-com bubble are just getting back to break even 26 years later. During monetary resets, information becomes a weapon. Those in power need people to remain calm, compliant, and focused on the wrong problems so the wealth gap can widen. Discernment becomes a survival skill. Now governments have a playbook when they borrow so much they can't raise taxes or lower rates without unleashing hyperinflation. It requires a merger of the central bank and government. The US already did this after World War II with yield curve control from 1942 to 1951. Trump's new Fed chair pick, Warsh, is calling for a new Fed Treasury Accord. Prior to World War II, debt to GDP was under 40%. After the war, it had 120%, but the deleveraged it down to 30% by the early 80s. The last 40 years reversed that, and we're back to unsustainable territory. Following World War II, the Fed bought unlimited treasuries to keep yields suppressed. Their balance sheet ballooned. The same thing happened in 2020-2021. The Fed's balance sheet went from $4 trillion to almost $9 trillion. But by 1951, inflation had reached 21%, and the Fed had to stop. History doesn't repeat, but it rhymes. Debt to GDP hits 120%, the Fed monetizes debt, inflation gets out of control. Same thing in the 40s and 50s, same thing now. There are 4 ways to reduce debt to GDP. Run a surplus, but spending is increasing, not slowing. Default, but that would collapse the global financial system. Grow the economy faster than debt grows through AI, automation, and robotics, but we don't know if that'll happen in time. Or inflate the debt away, which means unloading the cost onto the economy through higher prices. The government has quietly started stimulating markets again. The Fed has pumped $90 billion to stabilize markets in the last 8 weeks. They call it reserve management purchasing, not quantitative easing, but the technicalities are the same. They print money and buy treasuries. This impacts mortgage rates, the stock market, and the value of the dollar. When the Fed buys $90 billion in treasuries, more buyers push down interest rates. Lower rates mean institutions borrow more and put money into stocks. And printing $90 billion creates more dollars without creating more wealth. So each dollar buys less wealth, causing prices to go up. That's inflation. Inflation makes the average person poorer while the investor benefits. During these periods, opportunities emerge, not because the system is fair, but because it's unstable. Prices change, hierarchies collapse, new systems get built. If you can stay flexible and think in years, not weeks, you have a huge advantage. These resets happen quietly, hidden in plain sight. The people who survive accept reality early, adapt without ego, and position themselves strategically for what's coming. We just got one of the worst economic reports of all time, but it has huge benefits for one specific sector. The jobs created in 2025 were overstated by 1.29 million. Far less jobs are created than we thought, which means the Fed will be forced to slash interest rates to stimulate the economy. When you cut interest rates, construction rates and mortgages go down. People start buying and building. Building products and basic materials are rising up the ranks. The lumber sector tacked on 10% in 2 weeks. Home builders are shallowing out, getting ready for a run higher. The best scenario for investors is a new sector breaking out, showing strength, then grabbing leading stocks out of clean patterns. Now we need to talk about where the real infrastructure build is happening, because while construction and building materials are getting ready to move, there's another piece of infrastructure that's been absolutely exploding, and most people are missing it. Remember that company I mentioned at the beginning that's supplying optical components to NVIDIA and Google and all the hyperscalers? That's Lumentum, ticker LITE. And here's why this matters right now. This company reported record quarterly revenue of $533 million, up 58% year over year, its fastest growth in a decade. Guidance for next quarter sits between $630 to $670 million, with a midpoint around $650 million. That's an annualized quarter-over-quarter growth rate of 120%, meaning the company will surpass its $600 million per quarter target 2 quarters earlier than originally planned. Cloud and AI infrastructure now account for over 60% of revenue, with strong demand for next-generation laser components driving both higher utilization and margin expansion. The massive step page in growth reflects a structural transformation rather than a short-term spike. Over the past year, year-over-year revenue growth accelerated from 10% to 16% to 55% to 58%, tracking directly with the hyperscaler-driven boom in optical networking. And here's what's really happening beneath the surface. A silent architectural shift is reshaping AI infrastructure, one that determines how fast intelligence itself can scale. For years, AI training efficiency depended on scale-up designs, tightly coupled GPUs communicating through copper-based connections inside a single server. This intra-node domain maximized bandwidth within a box, but hit hard physical limits beyond it. Electrical interconnects degrade rapidly at distances over a few meters, not just from heat and latency, but from exponentially rising error rates as copper cables approach their physical size limits, making internode high-speed transmission increasingly unviable. But that ceiling just cracked. New architectures have demonstrated that scale-out, connecting servers and racks across a data center can now rival or surpass traditional scale-up in both cost and server performance. And the only medium capable of breaking that bottleneck is light. That's why the transition from electrical to optical signaling inside the data center has accelerated years ahead of expectations, creating a generational opportunity for suppliers of the optical engines that make it possible. Lumentum sits squarely at the center of this inflection. Today, most 400G transceivers use 100 gigabits per second per lane lasers, but Lumentum leads the next generation with 200 gigabits per second per lane designs, powering 800G and 1.6 terabit optics. It remains the only supplier shipping these 200 gigabits per lane lasers at scale. While its own transceiver module business is still in early ramp, demand for Lumentum's lasers from external transceiver module makers is already accelerating rapidly. These optical engines are indispensable to AI architectures such as NVIDIA's GB200 and Google's TPU, which require low latency, high bandwidth optical links to connect thousands of GPUs. Without such light-based interconnects, AI compute would hit a hard ceiling imposed by copper's electrical limits. Data movement, not compute, is now the bottleneck, and the only medium capable of breaking that bottleneck is light. Earlier this year, industry forecasts called for roughly 10 million 1.6 terabit optical transceivers to ship in calendar year 2026. By mid-year, that estimate doubled to 20 million. Big tech's expected to spend around $625 billion on AI infrastructure in 2026 alone, and a huge portion of that is going into the optical networking that makes these AI clusters actually work. So while everyone's focused on the AI software companies that are overvalued and burning cash, money is quietly rotating into the infrastructure plays that are actually profitable and growing revenue at triple-digit rates. Lumentum is supplying the critical optical components that connect NVIDIA's chips to Google's data centers to Microsoft's AI infrastructure. They're not speculating on future revenue. They're shipping product today and can't keep up with demand. This is exactly the kind of position you want to be in during a monetary reset and infrastructure build-out. Not the companies pricing in 10 years of growth today, but the ones supplying the picks and shovels that are already generating cash flow and have visibility into multi-year demand. What did I miss here, and what would you push back on? Let me know in the comments. And if you want access to my best trade of the day based off a combination of market experience and algorithmic screeners that I use, plus a daily 15-minute lives on market analysis, head over to stockscommunity.com. Join my Discord for just $25 for 7 days. Plus, if you want market updates I can't share on YouTube, sign up at free.stockscommunity.com. If you found this valuable, smash that like button, subscribe to the channel, and share this with somebody who needs to hear it. The people who survive these periods are the ones who position themselves not for a world that was behind us and fading away, but for one that was being built and one that was coming, one that was inevitable based on all the data. And right now, that data is screaming that optical networking infrastructure is where the money is rotating, away from the overvalued AI application layer and into the profitable infrastructure layer that makes it all possible.